All right, let's get back to Jim Rogers staying with us here on Satellite Asia headquarters. Also still with us out of San Francisco, is Michael Yoshikami from YCM Net Advisors. Guys, we've got a whole bunch of emails, so let's start clearing them here. Here's one from Mark. He basically wants to know, Jim Rogers, where is he gold going in the short term?
Mark, I'm a terrible market timer. I explained that on CNBC a million times. I'm the single worst short-term trader in the world. I own gold. If gold goes down for whatever reason, I'll probably buy more. If gold goes up, I'll probably buy more. I think I'm going to make more in agriculture. I think I'm going to make more in some other real assets for a while. I think I'll make more in silver. But I do own gold. So remember with the gold that the IMF has got this huge amount of gold that they're trying to sell. They're trying to get permission. And if they do, that overhang may have an effect on the price.
Okay, and here's one from Dean. He says, I was wondering how you, as in Jim Rogers, and other investors who live outside the U.S. deal with the currency differentials when buying and selling commodities. Obviously, you are a long-term investor, but you still see the U.S. dollar as depreciating. He says he bought the commodity ETF DVC back in March, sold it in May, made a handsome profit, more than 20% as far as DVC goes. Yet, when I looked at my financial statements, I actually lost nearly 10% because of the Aussie dollar strength over that time frame. So if commodities rise, U.S. dollar falls, how is anyone outside the U.S. supposed to take advantage of commodities? Not a bad question.
Well, no, of course it's a good question. The commodities around the world still trade in U.S. dollars. That's probably going to change. 100 years ago, they all traded in pound sterling, as you know, and that changed. The best I can tell you is that when commodities go up, something goes down against them, and it's usually the U.S. dollar. I'm surprised you lost money even in Australian dollars, because I don't know what you bought. I don't know the thing you bought. Maybe you should have bought the Rogers products instead of whatever you bought. But one does have to worry about it. I live outside the U.S., yes, but even when I lived in the U.S., it doesn't matter, you know. I'm a worldwide investor, and I have to worry about the currency and the commodities. I wish it were easy making money. I wish it were easy to get rich. If it were easy to make money, we'd all make money, wouldn't we? I have the same problems we all do.
Yeah, absolutely. Wouldn't it be nice to just like fall into a money pit? Jim, hold those thoughts on the currency issue and commodities. I just want to switch gears very slightly and talk about mobile phones, because Michael, I believe that you do own Vodafone. Now, overnight Vodafone, which is the world's largest mobile phone company, is, I believe, speeding up its cost-cutting plans after it forecast some flat profits for 2010. It also announced a $9 billion impairment charge. Let's just have a listen, and then I want to get your thoughts on the company.
When we announced our $1 billion cost optimization, cost reduction program, we had a target to make 50% of it this year. We now want to exceed 65%, and clearly we are also looking at other areas. But we want to announce things once we're sure exactly of what they are and who is responsible for making them happen. So we are looking at things, we are going faster, and if possible, we will go deeper.
Was Vittorio Colao, the CEO of Vodafone. Michael, do you still like the stock after hearing what you heard?
Yeah, I think they're really continuing on the theme of cutting costs and expanding into emerging markets. And I think it's really the whole play for Vodafone. Plus, you have a pretty reasonable dividend. It's a 3 or 4% dividend. So I don't think the news that came out today is any great surprise. I mean, we're in an economic downturn, so it shouldn't be a shock that their business is being affected. I am very encouraged to see them not be too hopeful, if that makes any sense, and actually continue to cut costs, because efficiency is going to matter in a much slower growth environment going forward.
Yeah, Michael, I was in India about a year ago with my family, and one of the things that really struck me was Vodafone signs everywhere. How important is that geographical diversity to the company in helping it overcome all the economic headwinds broadly?
Well, I think it's why you buy the company. I think if you buy Vodafone for its mature markets, you're buying a company that's probably overpriced. You need to buy Vodafone as really a play on emerging markets, emerging wealth that's going to happen around the globe, and so I think it's quite important, actually, Sri.
Jim, you know, you've been famously bullish China, not so famously bearish on India, but after these elections, you know, with a bigger, stronger mandate, they don't have to worry about the communists. You would think that finally now there's a potential to open up to foreign investment, maybe get their roads fixed and stuff like that, infrastructure going again. Are you any more optimistic about India? Or
well, I mean, the stock market is nearly doubled in the last few months. So
still like China, though,
yeah,
right?
yeah. So is China. Yeah, of course. I mean, I wish I'd owned India. I've been hearing this for 30 years from the Indians. I hope, and yes, the Prime Minister is a knowledgeable person, but he still, every time he tries to do something, he runs into problems. If he can pull it off, sure. But my advice would be, if you can find some smart Indians, you should invest with them. But boy, getting involved with the country as a whole, I'd rather be in China.
China still, huh? Okay.
Yes.
All right. Michael?
Jim, besides China, what's your second favorite emerging market? I mean, obviously India doesn't seem like it's high on your list. Where else should investors go in terms of an emerging market, an emerging country?
Well, I guess today, and I hesitate to say it because I'm not there yet, is Sri Lanka. You know, it looks after 30 years, it looks like there's going to be peace. And boy, normally when you go into a country after a 30-year war, there are astonishing opportunities. Michael, I wish you hadn't asked. I don't have anything in Sri Lanka yet, but it's highest on my list right now.
It's very interesting that you say that, Jim, but isn't the political situation there, despite the defeat of the LTTE, isn't it still far from over in terms of finding a lasting solution? If there isn't this question, if this question of autonomy for the Tamil minority isn't addressed, then they're going to come back, the problems are going to resurface again. So isn't it still a very uncertain picture, uncertain horizon?
But it always is at the end of a war. That's why you go in while it's still cheap. I mean, it's too bad I didn't go in a month ago. That would have been even wiser. But you asked Michael asked what's highest on my list right now. Sri Lanka's highest on my list right now.
Yeah,
if there were no problems in Sri Lanka, it wouldn't be on my list at all. The market would be up 200 or 300%.
But Sri Lanka into what? Into property, beachfront? Or
I don't have a clue right now. I said it's highest on my list. I wish you guys hadn't asked. I said I wouldn't. Nobody would know. Maybe nobody. I'll get there next week and there'll be 15 guys there. I don't want. I don't know what I'll buy in Sri Lanka, if anything. But whenever I've seen a war come to an end, it's always been, nearly always, huge opportunities for the people who get there. People are demoralized, they're confused, as you point out. What happens now? Things are cheap. But it has always led, nearly always led, to astonishing opportunities.
Those opportunities, understood. Okay, we'll get back to you in just a bit. Jim Rogers, still time to get your questions in for Jim. Email us at squawk@cnbcasia.com. We have to say thank you and goodbye right now to Michael Yoshikami, President Chief Investment Strategist, YCM Net Advisors, live out of San Francisco. He's been our guest host for the last 2 hours of the show.